Hey guys, this is Luis Moreno with Insurance Agent Training. ACA, there are a ton of changes that we're going to be dealing with in 2026 and going forward. One of the changes that I'm seeing that we as agents and our insurers are going to have to deal with is going from enhanced subsidies, where a lot of our clients were getting a good amount of help and probably paying the $0 premium, to where now they're going to be getting standard subsidies. When they get these standard subsidies, what we're going to see is an increase in what they're going to pay. So here is my prediction. I've been doing this since 2014, since ACA started. My prediction is this. Prediction is going to be that some people are going to just have to pay it because they're sick. But we're going to have a group of people who are going to say, no, I'm just not going to pay that premium. What's the alternative? What can you provide? And with that, we've got Todd Green from Pivot Health. He's going to be talking about their short-term plan. We're going to be talking a little bit about the legislative environment that we're currently in with short-term medical, which he just kind of told me we got some good news on that. And then we'll dive down into the plan offerings for Pivot Health. Todd, hey man, thank you for being on today.
Thank you, Luis. I appreciate you having me here today. Lots of very exciting, developments within the short-term medical world. So I'm happy to be talking Pivot, of course, with you guys and your team. So super exciting stuff. And to your point, when it comes to these enhanced subsidies, those are potentially going to be going away. And of course, that's part of the whole government shutdown right now, is they're wanting to extend those enhanced subsidies. But if those don't get extended, which I would be willing to speculate they probably won't, but don't quote me on that. But what that means is those folks that were getting an enhanced subsidy and were paying very low ACA premium, those are probably going to go away. And to your point, they're going to be paying more. So it's really created sort of this whole perfect storm opportunity to look at the alternatives to ACA. And with the enhanced subsidies going away, and what a lot of agents are telling me, and I've been to a lot of agency events, doing a whole AEP, OEP kickoff. So we're doing a lot of these events, and obviously I'm talking short term to agents all over the country. And what they're telling me is the average increase that they're seeing from the ACA premiums is around 18%, all the way up to 50%, 50. So you've got that in conjunction with the enhanced subsidies probably going away. So your higher income earners are getting essentially a double whammy. And that is also in conjunction with the legislative update, which I'm going to give here shortly. The legislative update, being able to offer longer durations, has created a perfect storm opportunity for you, the agent, to try and capture. So I'm going to go ahead and share my screen here.
And so one thing I just picked up with what you said there, Todd, two things are going against our insurance. Number one, rate increases, which is bumping up that premium, and then also reduce subsidies. So that
Mhm.
spread right there, guys. And I will tell you, there's a calculator we've been using from Kaiser, from KF, Kaiser Family Foundation. And we plugged in some numbers. I plugged in a family of four with, I can't remember what income, but it matched up perfectly, paying about $97 a month for their ACA Silver plan right now. That same plan next year is over $400. So some people are going to be able to absorb that, some are not, but some of them are going to say, hey, I'm not going to pay that premium. What is the alternative that you're going to provide me? And look what you got here on the screen, 3 years of uninterrupted short-term medical coverage. Oh, that's beautiful, man. Let's talk about this thing.
Yeah. So before we get started, I just want to just quickly go over Pivot Health and how our business model is set up, because I think it's important, especially when it comes to the short-term medical market and the way that things can change depending on the legislation. But I want to just point out that Pivot Health is we were founded in 2016, and Pivot Health is not the actual insurance carrier. What we are is a product development, distribution, and marketing company. Now, what does that mean basically? That means that we build the product, everything is proprietary to Pivot Health. We build the product and then we take it to carriers to utilize their paper or underwrite, whatever you want terminology you want to use, but we use these different companies to underwrite our short-term medical plans, which gives us a unique capability in the event that the short-term medical climate can change. Just to show you how innovative we are, we were actually able to, when we had the 4 month or the 3 month plus 1 month legislation rule that took place on September 1st of last year, we were actually able to combine a three, 4 month plans together to give someone 12 months of uninterrupted coverage. So just want to illustrate our business model and how nimble we are to quote unquote pivot to the market. To sound a little corny, but hey, it works, right?
I
So
like it.
just to show you how we can pivot to the market. Now, to get to the nitty gritty on the CMS update. So in August, CMS said that they were no longer going to enforce those short-term duration and rewrite rules that took place on September 1st of last year while they come up with new ones. So what that meant was that we were able to quickly navigate and go back to sort of the older rules where we could offer plans up to 12 months and then ultimately extend those up to 3 years. So giving that higher income earner that doesn't qualify for a subsidy more expanded options as well as higher lifetime value. And of course, this creates a lot of buzz and a lot of interest with these higher income earners. And you as the agent, this gives you a perfect solution, more tools in your tool belt to be able to offer your client. So what we did was when those rules came out, that they were no longer going to be enforced, we moved quickly, and then we announced in September or the end of August, and then in September we moved quickly to roll out our short-term medical plan options. We have a few different options, and we were able to extend those out into 16 states. So we were able to go back up to 3 years in 16 states while CMS essentially comes up with new rules. So this gives you some robust plan options, gives your client transparent, predictable healthcare costs. And then a lot of our plans, especially in Texas, we have two different series of plans where they have rate locks. So you put them into a 3 year plan, and those rates are locked for all 3 years. You don't have to worry about those increases going up. So, what I want to do is just kind of give you a snapshot of our short-term medical plans. Obviously, we have a lot of different options. So, depending on what your client is looking for, we have some really great options. If they're looking for something catastrophic, low cost, we can provide that. But if they're looking for something more robust, and when I say robust, meaning that it's got office visit copays for sickness or injury, it's got copay plans for prescription drugs. You also have some plans that utilize some of the top national networks, but then we also have plans where the member doesn't have to worry about a network. And of course, all our plans are going to cover emergency room, inpatient, outpatient, diagnostic testing. So these are kind of like your modeled after your traditional, group plan with a lot of different options in between. We can also help the agent complete the benefits package, and that's going to include an add-on or a standalone dental and vision plan. And then we also have another product that's available as an add-on only, and I'll of course dive deeper into that later on, is called our Latitude plan, which is a supplemental type of product to help protect your client in the event of a critical illness, accident, or some type of a hospitalization. Now, if you do work other states, we do have, of course, a chart that's going to show you all of our product availability as well as our duration availability. Now, when you do get contracted with Texas Health, of course, you'll be given access to the Pivot Health portal, and you'll be able to obviously run quotes. You can attend additional trainings, but then if you do work other states, you've got this nice chart here to help show you where we have product available. And incidentally, I know you're mainly in Texas, and Texas is our number one state. We do more business in Texas, and from what a lot of agents tell me, our rates in Texas are unbeatable,
I agree.
especially when you talk a value add when it comes to our plans.
Most definitely.
All right, so let's dive deep into our different short-term plans. I'm going to go over these, just give you a high level, give you who they were built for, who the appropriate audience is, if you will. Also the duration availability, and then if they have a rate lock or not. So and then I do want to talk about the importance of offering the 3-year plans because it's so easy just to set them up for 3 years, and then especially with the plans that have a rate lock, it's just easy to set it and forget it. But first up, let's talk about one of our newest options in Texas that can go up to 3 years. These are our SureCare plans. Our SureCare plans are a great option. They are underwritten by Pan American. These are a great option for families, perhaps a females age 40 plus, or someone looking for stronger wellness benefits. One of the cost containment methods when it comes to short-term medical is that it doesn't cover a lot when it comes to preventive and wellness benefits. So, one of the reasons why ACA is so expensive is because pretty much anything that's considered a preventive is to be zero cost to the member. So, colonoscopies, those can be super expensive. Those are to be no cost to the member. So, all that does is just drive up the ACA premium. So we rolled out a couple weeks ago our SureCare plans. These are available up to 3 years in Texas right now. These do include rate locks. So you can put them on a 3-year plan, and those rates do not increase in the second and third year. These plans are super robust. They have unlimited office visit copays for sickness or injury. The incidentally, the copay it's a $30 copay, flat $30 copay for sickness or injury. That also includes a specialist copay as well as an urgent care copay. No network on these. These plans allow for any provider, any facility in the US, which is a great option, especially for some of those practices that do not contract with any insurance company. These work perfect for that because these allow for any provider, any facility in the US. Now, when it comes to wellness benefits, the SureCare plans are probably one of the strongest I've seen on the market, even in comparison to some of our other plans. The adult wellness exam is a flat $50 copay. Some of the additional wellness benefits, again, not typical for the short term world, is that the women's OBGYN exam, the pap smear, the the screening mammogram, the men's prostate screening, childhood immunizations are subject to the plan's coinsurance. It's not subject to the deductible, which means we pick up 80% of the cost for those screenings right off the bat. Those, again, are not typical for the short term world. These are great options because these also have lower deductibles available. These also include, diagnostic testing. These include no emergency room or hospital co-pays, and you can have next day effective date for these or you can go up to 120 days in advance. So the SureCare plan is available up to 3 years in Texas with a rate lock, and these are great for families as well as those females age 40 plus.
Hey Todd, when it says there are next day effective dates for injury, is it different for a sickness?
Yes. So great question. So there is a 3-day wait for sickness. So pretty much what I always say is that there is a 3-day wait for anything outside of an accident.
Okay.
So sickness, well check, anything along those lines is going to fall within that 3-day waiting period. And one more waiting period, just to mention, to be fully transparent, is that there is a 30-day wait for cancer. So that's also but those are the two waiting periods. Any questions on these that you might
Oh
have,
no,
Luis?
man, I didn't even know we had this product. I'm pulling it up here on my other screen. It's competitive in price.
Yeah, and
Wow.
it's rich. It's a robust plan for sure.
No, I agree.
Okay. All right, so now we do have other different series of plans, which can be a little bit overwhelming, but we do have these different series to target specific audiences, and that's one of the reasons why we went with all these different series. So first up, we have our core light plans. These are underwritten by Companion Life. These are available on a 3x364 in Texas, also with a rate lock. These plans were built for your poor college student. Typically, your poor college student, they don't qualify for ACA because they have no income. If their parents make too much money, then they are not eligible for Medicaid either. So with these plans, we wanted to build something because typically that poor college student needs something that they can go to the doctor with, but they also, in the same token, they need a low premium. So we built a light plan. These have office visit copays for sickness or injury, including urgent care copays. This does include some preventive and wellness benefits. It does have access to the First Health Network, and there are some prescription drug benefits included in this as well. Now, in order to be able to give it those robust first dollar benefits, while at the same time offering a low premium, it does have limited or fixed hospital benefits. So just want to make sure that you're aware that these core light plans do have limited and fixed hospital benefits. So really designed for somebody just so they can have something that they can go to the doctor with. Next up, we have our classic series. Our classic series has four different plan designs within that series. These are very well rounded. So just depending on what their budget is, what they're looking for, they have an option within this. These are underwritten by Companion Life. These are available on a 3x364 3-year plan in Texas right now, also with a rate lock. These plans do not have a network, allows for any provider, any facility to submit a claim. We process them accordingly. These also include preventive and wellness benefits. You also have some options that include an office visit copay for sickness or injury, and also some prescription drug benefits as well. So the Classic series is a great staple series of plans, and it's popular for really anyone, just depending on what they're looking for. And then we have another series called our Epic series. Our Epic series is sort of one of my go-tos. Now, these are not available up to 3 years yet in Texas. We had to do some refiling. We're waiting on Texas approval, but we do have these plans up to 120 days at the current moment. These are one of my go-tos. Reason being because it's got wellness benefits for the entire family. Also, it does have some, it is a 100% plan. So, meaning once the deductible is met, the plan pays 100% of covered services. These plans do include some optional features. You can have an optional copay drug card. You can also have an optional accident rider. Depending on the state, the Epic series does have two versions. You have an Epic base, which means that there is no network, and then you have an Epic PPO, which utilizes the Cigna network. Now in Texas, the Cigna PPO, so the Epic PPO plan that utilizes the Cigna network, is not available in Texas. I don't foresee it coming up because to add the Cigna network to that plan would really outprice us even beyond our competition. So we don't foresee that the Epic PPO plan being offered in Texas. But we have the Epic base, again, no network, and it's very competitively priced, especially with the optional features that you can add. These are underwritten by North River, and North River is a subsidiary of Crum and Forrester. Um, then we have our quantum plans. Our quantum plans are also not available in Texas, but just to quickly go over them, they are underwritten by Companion Life. They are available in some other states that do have up to 3 years, and also they include rate locks as well. But these have access to the Cigna network. These are have also includes some first dollar preventive and wellness benefits. It also includes a supplemental accident benefit. It's baked right in the plan. So it's a really rich plan, great option for established entrepreneurs or perhaps that early retiree looking to bridge the gap to Medicare eligibility. Any questions on these,
And
Luis, that you might have?
the only issue that when I run into these, and I like the way you're breaking it down here, is there's a lot of offerings, a lot of different plans that we can choose of. So I
Yeah.
went ahead and I plugged in a 25-year-old into the Raider, selected SureCare, and it's giving me three different deductibles: at 2,500, 5,000, 10,000. Co-insurance is fixed at 20, max out of pocket is fixed, and then you select what the amount of coverage. I mean,
Yeah.
I'm surprised. I mean, these are free. These rates are really good,
Yeah. Very, very competitive,
very
especially
competitive.
for especially for the benefits.
Now, just as a reminder for the subscribers on here that are going to be watching this, in an ACA policy, the deductible is built in to the max out of pocket. In the short term world, you got to add them both. Am I correct? Is it the same principle applying here with Pivot?
Yes and no.
Okay. All
We
right.
got to keep you on your toes, but I'm glad you brought that up because the SureCare plan does not the max out of pocket that you see on the screen does not include the deductible. So you do have to add the deductible into the max out of pocket.
Okay.
So with that said, your companion plans do include when you look at the max out of pocket on the screen, it does actually include the deductible. The max out of pocket does include the deductible. So it does vary by plan. There is a little question mark when you highlight over it that kind of pops up a little bit of verbiage that basically states that, but the SureCare plans are the only ones that do not, the max out of pocket does not include the deductible.
Okay. So you would have to add them both, but the other plans for like maybe the core plan, for example, so that one,
Correct. That one includes the deductible. Now keep in mind the limitations with the hospital on that particular plan. But the if you're looking at say the one of the classic series, which would include like the deluxe or the choice plan, those max out of pockets do include the deductible.
okay. Interesting. Okay, got it. I just thought across the board they weren't that you wouldn't put them together, but it depends.
Yeah, it depends, and that's mandated by the carrier. So, um, Pan American, which underwrites the SureCare plan, has us display it that way that it's really the max out of pocket is just a co-insurance maximum,
Okay.
whereas like on the companion plans, they say you can include the max out of the deductible into the max out of pocket. So it's done by a carrier, unfortunately.
Okay, got it. So any companion product. So like the core plan in
Hmm.
this and the one and the quote that I'm running, I have a $2,000 deductible, co-insurance 20%, max out of pocket 3. So
Hmm.
after they pay that 2 grand, then they're splitting the remaining portion of the bill 80/20. And when their 20 hits another grand, then they've satisfied the max out of pocket.
Right.
Okay.
But with that, keep in mind that particular plan with those fixed hospital benefits, even after the deductible and max out of pocket is met, there are limitations when it comes to hospitalization, which the member would owe anything above and beyond.
Okay.
So for example, so the max benefit is $1,000 per day in the hospital, and that's even after they've met their max out of pocket on the core plan.
I see. I see. Gotcha.
Yeah.
Okay. Yeah. I didn't download the brochure, but I'm downloading it now. Okay.
Yeah.
Tracking. Good. Super interesting. This slide deck, man, will you be able to email it to me, Todd?
Oh yeah. Yeah, of
Okay,
course.
great. Yeah, I'd like to definitely share it so that I put it as in the description down below. I will attach this down there for them.
All right.
Very
So
cool.
that concludes the sort of the deep dive into the different series of plans. Now I want to talk about why it's so important to put a client on a 3-year plan, especially if they don't know where they're going to get their benefits for the next couple of years. Also, one of the biggest markets that's within the short-term market, it's a niche market, but one of the biggest markets that's within that is the folks that they are a Medicare enrollee and they have a younger spouse that has 2, maybe 3 years to Medicare eligibility. The 3-year plan can help bridge that gap, bridge that client to Medicare eligibility. And then for that agent, when that client is getting ready to turn 65, they have a free Medicare lead that's been a part of their book of business. So that's a huge that makes up a huge portion of, say, the Medicare world, if you will. Because when we talk to agents, or at least when I do, and they talk about, they look at the the ACA premium at a 62-year-old, they don't get much of a subsidy. I mean, you're easily talking $1,000 a month, and short term could be a better fit for those folks.
I agree. I agree. And especially 2026, it may not be. It's not going to be nice. It's not going to be
Yeah,
I'm not looking forward to it.
yeah, definitely not. But the importance of offering the 3-year plan is that you can literally set it and forget it. So, especially with the rate locks, the plans that offer rate locks, you fill out one set of eligibility questions, and that's going to enroll you into 364-day plans that are tied together. So that way you're offering up to 3 years worth of coverage. One plan ends, the next one picks up automatically without a gap in coverage. Also, if a new condition occurs in that first term, it would not be considered pre-existing in the second and third term. So you really and truly are protecting your client for up to 3 years. You can cancel at any time, but you are protecting your client up to 3 years. So great for bridging to Medicare and also those folks that do not qualify for a subsidy and they don't get they don't have access to a group plan. So these are obviously budget friendly and these provide your client with peace of mind. So super important to offer these 3-year plans, especially if somebody doesn't know where they're going to get their benefits for the next couple of years.
I agree. And here's one technical question that still kind of it's hard to answer. So let's say that we have a 3-year plan and
Mm-hmm.
we're in the insured is in the hospital. We're in day 363 of the first year.
Mm-hmm.
Or 364, they're still in the hospital. And
Right.
then a new term starts, which you're saying, hey, this doesn't have to be underwritten. They're good to go. Am I right with this assumption that because it's a new term, they're now subject to a new deductible, co-insurance, and out-of-pocket maximum?
That is correct, and that's a great question. So the everything resets when you go into your next coverage period, but as long as it was considered a new condition prior to enrolling in the 3-year plan, that condition would still be covered in the second and third term. But yes, the deductible and max out of pocket does reset going into your next coverage period.
Gotcha. Gotcha. Yeah, that's something insureds have got to be aware of. It's a little scary, but
Yeah.
still going to be a drop in the bucket compared to a bill if they're in the hospital.
Right, correct. All right, now I do want to quickly talk about our what makes our plans unique and competitive over our competition? Well, all of our plans, as you saw, include first dollar preventive and wellness benefits. We have some plans that offer unlimited office visit copays for sickness or injury. You have some plans that utilize some of the top national networks, but for the most part, the majority of our plans do not have a network. So there's no restrictions. Allows for any provider, any facility in the US to submit a claim. And then, of course, we process that accordingly. When it comes to underwriting, we just ask a series of eligibility questions. As long as they can answer no to our questions, then they pass our underwriting. So we take a simplified approach. We don't do any RX underwriting, we don't do any MIB underwriting. It's just we just go based off of the applications. We only have a weight requirement and it's less than 300 for male, less than 300 for, I'm sorry, less than 250 for female. We also don't need a social security number. So for any non-citizen, we don't need a social security number. We don't need a green card number or residency number. The only thing that we ask is that they have lived in the US for 4 months consecutively prior to uh, the application date on the plan. So no residency. The only thing that we have is a residency requirement, which is 4 months. We can do children only plans. We can go all the way down to 6 months of age. And then the other end of the age spectrum, which ties in that pre-Medicare market, bridging clients to Medicare eligibility, we can go up to 64 and 11 months. And then another great value add when it comes to our short-term plans is that all of our plans, whether it's a 30-day plan or a 3-year plan, all of them include free and unlimited virtual urgent care through our vendor called Clever Health. And these are great options because if you're traveling across the country, you need an antibiotic or some sort, or perhaps you've got a skin condition, you can video chat with a board certified doctor through the Clever Health app, and then they can file your prescription to the pharmacy of your choice. So, great value add that again is included in all of our plans.
Nice.
And then, really quickly, I want to just quickly talk about the open access plans, meaning the plans that do not have a network. How are we able to offer that? So basically what we have is we utilize something called reference-based pricing. Reference-based pricing utilizes the established Medicare reasonable and customary amounts. However, we do pay a little bit better than Medicare. At the doctor's office, we pay 125% of Medicare allowable. And then at your facilities, we pay 150% of Medicare allowable or Medicare reasonable and customary. ID cards come with step-by-step instructions. The member can say that they have any provider plan, any facility plan. Here's my ID card with instructions to file it electronically. The provider facility files the claim. We receive it. We process it accordingly. We make our payments to the provider or the facility. Again, it's all electronic. And then an EOB is generated. That EOB is going to state what the member is responsible for. Now we make our payments. And then if the provider turns around and says, well, I'm not contracted with you guys, I'm going to still charge you for the full amount, the plans have balance bill protection because that's considered a balance bill at that point. The plan has balance bill protection for those covered services. All the member has to do is send that to us. It goes to the negotiation team. That negotiation team works with the provider or facility on the member's behalf. If we can't come to an agreement, then Pivot actually pays the difference. Now, this is a great business model because when those claims come in, we are going to discount that claim based on the Medicare reasonable and customary. And what we're seeing is almost 70% off of that full charge. So that means less out of pocket for the client. Also, when it comes to these plans that don't have a network, one of the reasons why we're able to add free and unlimited telemedicine, also the great wellness benefits that are included, is that we're not paying for a big name network. So when you add a network to a plan, all that does is increase that monthly premium. So you're also paying lower in monthly premium for those plans that don't have a network. And then ultimately, the third win is the balance bill protection. The client is still protected at the end of the day.
So
Now,
really, all they're going to be on the hook for is that 20%, and then you guys are going to negotiate any extras that come down the pipeline for them.
well, right. So once they've met their out-of-pocket maximum, so their deductible and their out-of-pocket maximum, that's all they're going to be responsible for. Obviously, it has to be considered a covered service, but that's all they're responsible for. And then if the provider facilities decides to charge more than what we're allowing, the client is still protected because then at that point, all they have to do is send us the bill, and then we will negotiate and pay the difference if need be.
Pretty good.
hmm So this really and truly allows the client to be able to have any doctor, any facility in the U.S. to submit a claim. Now, if the member needs help finding a doctor, we do have a concierge service. All they have to do is pick up the phone, give the phone number, the phone number that's on their ID card. All they have to do is call that number, and then if they need help, listen for the prompts for the concierge service. That concierge service can provide care navigation, help them find a doctor or an urgent care facility or any other type of facility that will take the plan. They will help them navigate those clients, and this really cuts down on some of those providers that have questions in regards to the whole claims filing process, or if there's ever any issues or anything like that. So they can utilize this service. This is included in all the plans that do not have a network. All right, now let's talk about really quickly the ancillary options that we have available. This includes dental and vision as well as a supplemental product. It's super easy to get these cross sales. You don't want to leave any money on the table, so you can add a dental and vision option to a short term. Literally check the box, and this also allows you to add an additional product, our Latitude Gap plan. That's available as an add-on only. But it again, super easy. Check the box to add that. But the dental and vision that we have utilizes the Renaissance network. They are any dentist plans. We do have certain options where there's no waiting periods, including major services. They are set up as progressive style, so they actually increase in the second and third year. Even after the short term expires, they can keep the dental and vision as long as they want to pay the premium. It also is available as a standalone, I might add. You do have some plans that offer three cleanings paid at 100%. Childhood ortho is included on the max plan. And then the add on vision is set up through VSP. And we give you a $150 frame or contact lens allowance. And again, that's available as an add on to a short term or as a standalone product. Then the Latitude again is a add-on only to a short term. It's a bundled accident, critical illness, and hospital indemnity combo all rolled into one that pays two. You have two options that you can choose from: $2,500 benefit or a $5,000 benefit, and that pays cash directly to the member. All right, that concludes our product lineup. Do you want me to go into like quoting it all
You know
on how
what?
you
Let's show them the quote platform. I think that'll be great so they can see what it's like. I've been playing with it here on the side while you're doing this. But yeah, let's definitely take a look at that.
Okay. So once you get logged in, let me back up. Once you get logged into the Pivot portal, the Pivot Agent portal, you got lots of information in there. You can have the state availability chart, but most importantly, let's talk about getting a quote and emailing a quote. So simple census, super easy. Plug in the demographic information. Of course, if you're doing a child only, check the child only box. You can do next day effective date, or you can go up to 120 days in advance. And then you can choose two duration options. You can do up to 180 days or up to 364 days. If you're obviously wanting to do the 3-year plan, All you have to do is click on the 364-day duration. You pick the plan that you want. You can adjust the deductible. You can adjust the out-of-pocket maximum on some plans. You can also adjust the total policy coverage. And then to add those additional coverage periods, all you have to do is click on the duration box and set up the 3 times 364. That's going to set that 3-year plan up. Then you can email the quote directly to the client, and then they can enroll right from that email. And if you want to add additional products, you check the box to add the dental and vision, and then you check the box to add the latitude programs, which is the supplemental product.
Pretty easy.
Yep. And then,
Is
of
the
course, the
rate lock,
checkout page.
and I'm sorry, I may have missed it. The rate lock that you were talking about, is that something that's clickable or just built in?
It's built in, and
Okay.
it's built into all the companion plans, and it's built into the SureCare plans.
Yeah. Man.
But yeah, that's automatically built in. So you don't have to check anything. It's not going to increase the premium. It's automatically built in there.
Okay.
And then you, of course, have the checkout page. You enter in all of their contact information. Email address is very important. Everything Pivot is 100% electronic. Enter in the billing information. And then you continue on and you submit for e-signature. E-signature process is super easy. All the member has to do is open the email that they get, and they can follow the prompts, and then boom, they're done.
Easy piece. Now, is there a back or broker site for them? Let's just say we issue the policy. Well, when the policy is issued, do they receive an ID card?
It's all included in the member portal.
Okay.
So member portal includes all of the appropriate policy documents. The agent also has access to their clients' policies through the Pivot Book of Business, the agent book of business.
Okay. And the agent portal, is that
Hmm.
Allied Health?
No, that's Pivot.
That's
That's
Pivot.
strictly
Okay.
Pivot.
Okay.
Yep.
So I need to figure out how to get that link. Can you send me that link to the broker portal? Because I think for a while, Pivot and Allied aren't associated with each other, or they were.
So Pivot we're its own company. Um, Pivot utilizes Allied National for two things. One is product distribution, so they're one of our top FMOs,
Okay.
and then also they are our administrator. So they handle all the claims, they all handle all the billing, and then of course the commission payments from them are as well.
Okay, got it. Now I know the association. That kind of, so I may have, and now is that where I would go to the broker or an agent would go for the broker side of things?
Not to the Allied site. So you would want to go to pivothealth.com/agent.
Okay, / agent. Got it.
Yep. So when you go to that, you register with your agent number, and once you get everything set up, then that's going to log you into the Pivot Health agent portal.
Perfect. Perfect. Okay. Got it.
And then, of course, we got a couple of bonuses going on right now. We do have a new agent bonus. So if you're newly contracted and you sell your first 3 policies, if you're newly contracted between September 1st and November 30th, you sell 3 policies within that 90-day time frame, we're going to pay you $200 extra on top of your bonus. I'm sorry, on top of your agent commissions. And then in
Extra money
addition to
didn't hurt.
that, we do have a quarter 4 bonus as well. Basically, we're going to pay you per application once you have met your baseline, which is 5 short-term medical applications, and it can be any combination of a 180-day, 2 by 180, 3 times 364, or 3 by 364. And that's running currently all the way through the end of the year. And it's an unlimited bonus opportunity.
Okay. I like it. How long is contracting taking right now, Todd?
Contracting. So, your upline is Allied, right? Or
I
is it the,
I go I it's kind of you know what I need to figure that out. What I've been telling agents just if those that want to get contracted hit me up, send me an
Mhm,
email. My email's
mhm.
down below. It'll be in the description. We'll get you set up. But I don't know if Allied is associated with the brokerage somehow or not.
Yes.
They are.
So so you've got the brokerage and then you have Allied above that. So
Okay.
Allied is the MGA. The brokerage, of course, is the GA as well.
Okay.
But Allied is at the top there. And
Okay.
that's who the brokerage goes through.
Okay, got it. That makes sense. Okay. Yeah. So for
But
those agents out there that are watching this and you want to add this into your portfolio, because guys, I will tell you, 2026, we're going to need to have something like this ready to go for our insureds that decide not to get an ACA plan. And it's better than having nothing. I mean, it's way better than having nothing. But going without an ACA plan, it does cover the pre-existing conditions if our insureds are healthy or our prospects are healthy, this is going to be a great option for them. And besides this, I mean, there's nothing else out there other than limited benefit plans, which more supplemental plans. But I'm really liking y'all's products.
yeah, to your point, the short term could be a better fit, and especially with being able to go up to the longer durations now, it does provide that more longer term, even though it's still a short term product, more longer term solution.
Right.
And there's a ton of opportunity out there now.
Man, Todd, man, this has been some great info. I kind of got a little rusty with short term. We've been doing a ton of just ACA, very little short term. I've done a lot of college kids, and that's about it. But I'm really liking this as a good alternative to ACA. And I think the key here is they don't have to be U.S. citizens. Now, I like that. They got to live here 4 months, right? And then a few underwriting questions that they're going to have to answer.
Right. Correct.
Pretty cool. And the rate lock.
Yeah.
Nice. Awesome. Well, guys, do me a favor. For those of you that are thinking, hey, I need to have pivot, just down below, if you just click on the description, a bunch of stuff will pop up. My email's in there. Send me an email. We'll get you contracting out. They'll get you set up. Todd, what did you say the time frame was from you submitting an agent app to getting set up?
So the brokerage does something a little different. They give a generic link.
Mhm.
They go ahead and collect the paperwork, and then once you make your first sale, that's when they send everything over. But you will have the ability to quote and enroll someone right away.
Okay, sounds good. If they don't, so I guess they'd be using a generic quote engine then?
Yes.
Okay.
Yeah.
Sure, I gotcha. Okay, I need to get that for agents.
Which I can send you yours. You have a generic, I mean, it's not generic because it's actually your link. I can send that to you, and then you can send that to your agents, and of course you'll need to get the paperwork ahead of time as well.
Okay,
So, ideally what you can do is get the paperwork going for them, have them fill everything out, submit it, and then if they need something in the meantime, a quote, and they need to enroll someone, you can utilize that link that I'm referring to.
perfect. Well, that will definitely work. Awesome. And I just figured out how to get into the Pivot Health site. I am in now. Nice.
Awesome.
Okay. Sometimes the light bulb doesn't turn on. I'm running all over the board, but very, very nice. I do have it. Okay. Well, I'll wait for that link. We're good to go, Todd. I appreciate your time. And guys, don't forget, you got to have a short-term offering. I like what Pivot has. Send me an email and we'll get you guys set up. Thank you, Todd.
No, thank you. I appreciate me being able to present.
You're
Take
welcome.
care.
Take care, guys. Bye bye.